Hello, I am Vadini Aryam. Welcome to my course Beginner's Bookkeeping. This is section 3 and lecture 10. Budgeting and costs. There are fixed and variable costs in a business, and there are also direct and indirect costs. Direct costs involved in the production of products, and variable costs used in the general running of the big company. Fixed and variable costs. The variable cost will vary according to the level of production. If more products are produced, then the value of raw materials used for the production will increase. But the fixed costs will remain the same whatever the production takes place. For example, rent and rates, electricity, salaries will not increase if the production level goes up. But also, if there is no production, also the fixed costs will not be reduced. Semi-variable costs. When production increases, there will be increases in machinery and labor cost. To meet the heavy load of work, more labor will be required and also invest in more machinery. When forecasting the production cost for your careful budget, consideration is needed. If not, the budget will not be accurate. More labor will be required and also invest in more machinery. Selling expenses. After the increase in production, more products available for sales. Therefore, more sales force is required. In the event the demand for the product goes up heavily, more sales force needed to cope up with demand for the product. So when preparing the budget, these things need consideration to avoid cash flow problems as well. Budgeting sales income. The forecast for this is taken from the profit and loss account, and usually the first item appears in the budget. Now the sales have increased this year, whereas the budget was done based on last year's financial report. So your forecasted figure might be wrong in your budget. Therefore, the budget needs revision on a monthly basis to avoid inaccuracy. It is also essential to check the number of units sold and the value of the units as well, which you would decide before the setting up of the budget. Who does the sales forecasting? If you are a sole trader, you will do the work on your own. And if the organization is a significant one, everyone will get involved. It is essential. Forecasting of sales have to be well coordinated. Setting a price for budgeting. You must be having an idea of the number of your goods sold in the market, but cannot go along with that. You need to do your calculations that include direct and indirect costs to arrive at a price for your product. Also make sure you are almost in line with the market price of your product. If not, your sales will go down. The price calculation will include direct and indirect costs for the production of the products. Direct costs are the cost of raw materials, labor for manufacturing, energy used to reduce. The indirect costs will be the administration costs, marketing, sales force expenses, rent and rate. Budgeting for overheads. We need to look at the indirect costs in running a business, mostly the rents. Overheads include rent and rates. If you are renting a property, the charge is fixed and you know about it. When you own the same property, apart from the rent, you may incur unexpected expenses like immediate repairs. Salaries. It includes the monthly salary plus the employer's national insurance contributions for the year. Traveling expenses. That depends on your business. If you have a consultancy business, you will be traveling a lot. So better to base your figure on last year's accounted figures. Insurance. Any business needs a different type of insurance. Coverages such as public liability, employees liability insurance, building insurance, equipment insurance, product insurance. The types of insurance purely depend on your business. Cost is fixed and mostly paid annually. Telephone. It includes the cost of calls and the rental, but again depends on your business activity. If the business is doing well, you will have more calls. And if the business is not doing well, you will have more calls because you want to contact the potential customers. So that is also helpful if you analyze the previous year's expenses to arrive at a figure. In this way, you should be able to forecast more overheads and include that in your budget. You cannot afford to miss anything as it might lead to inaccuracy in the budget. It will take you to a stage that you cannot depend on the budget. If the budget is strong, the consequences can be severe and will affect your profit at the end of a financial year. So the budget is very important and it helps you to run the business successfully. I hope you understood the need of the budget for the business and the costings as well. Thank you for watching my video. Thank you. Bye for now. I will see you in another one. That's going to be the last lecture. Thank you. Bye for now.